while I am
So I
getting my
do
screen in
my
Afternoon,
place.
everyone, and welcome to Justine Peterson Presents Ignite Illinois. We are excited that we are the third week into our webinar series, and we have the wonderful, the awesome Shelita Gray. Shelita, it is all on you. Oh, let's do some housekeeping. Housekeeping is you can ask questions during the presentation, and if you cannot unmute yourself because of work, you can type it in the chat and I'll ask the question for you. So without further ado, Shelita.
Thank you. Thank you. Thank you. Good afternoon, everyone. And thank you for attending my session on accounting essentials, keeping your books in order. I am Shelita Gray. I am an accountant by trade. I have been in the accounting finance arena probably for maybe about 27 years. I have served as the controller, director of finance, CFO, and I do some side work with small businesses. So welcome to the class, and I hope you get something out of this by the time the class is over. First, we have our welcome and agenda, and these are the topics that we'll cover today. We'll talk about bookkeeping basics and what bookkeeping is, financial statements overview, the major statements that are used in most businesses. We'll talk a little about cash flow management, choosing an accounting software, and when to consider professional help to hire someone to help you with your books. Yes, and if you have questions, again, please feel free to raise your hand or ask questions in the chat, and I will answer them as best as I can. So we'll start with what is bookkeeping, and why is it essential? So bookkeeping is pretty much just the recording, organizing, and tracking a business's financial transactions on a daily basis. It's the foundation of accounting because it keeps accurate records of all money coming in and all money going out of a business. So in short, it's just about keeping your books in order. It helps the business owners to understand their finances and make decisions based on their finances. That's the definition of bookkeeping. The key bookkeeping concepts and the key terms that are used in bookkeeping, you have a chart of accounts, and your chart of accounts lists all the accounts used by your businesses. So your assets, as in cash, any property owned, things like that, your liabilities in what you owe, who you owe, any things you have that you need to pay, loan payments and things like that. And the chart of account also includes your revenues and expenses. So that's the first thing. You hear that often. You have to have a chart of accounts to do bookkeeping. And all of that is kept in your general ledger, which is just the record keeping system where all of your accounts are updated each time a transaction happens. Journal entries are a major part of bookkeeping, and it just records your financial transactions into the general ledger. So anything that happens is done with a journal entry or an accounts payable entry when you're paying bills. All of those hit your revenues, expenses, cash accounts, things like that. And the trial balance, which ensures that all your debits equals credits. So one thing in accounting is anything you book has to have a debit side and a credit side. And for example, say you are just spending money on supplies, like you going to buy supplies for your business. The debit side would be the expense, which is the supplies expensing the supply. The credit side would be the cash because it's coming out of cash. Now, one thing about accounting that is sometimes difficult for people that are not accountants is that when you spend money, from an accounting point of view, cash is credited, but normally you feel like cash is credited when you receive money. But in accounting world, when you spend money, you credit your cash account and you debit your expense account on whatever you're spending the money on. And that can be confusing to people. But that's how it works in the world of accounting.
Can you say that again, please?
So in accounting, say, like I said, it's always a debit and a credit. So if I went out and bought supplies for my business, say I have a hair business, because I know Deja has a hair business, and she's going out to buy her bonnets that she sells. When she buys the bonnets, she would debit supplies expense because that is increasing the expense, but she would credit her cash account for the same amount of money. And that's the debit and the credit. That's how the accounts will equal. So say she spent $100 on bonnets, the debit will be $100 to supplies expense, the credit will be $100 to cash. And that will, on your bottom line, when your trial balance, when you're having your debits and credits match, you have 100 on the debit side and 100 on the credit side. And it might be a little confusing, but
It is. So it'll eventually balance itself out.
yeah, because the debit is $100 and the credit is $100.
Okay.
So that's the balance. Yeah. The basic accounting equation is next. And a lot of people have heard it. They don't really know what it means, but the basic accounting equation is assets equals liability plus owner's equity. And that's the foundation of accounting, because your assets are what you own, your liabilities are what you owe, and your equity is your income. So that's the basic accounting equation. Sorry. Next, we will talk about financial statement preparation. Well, before I go there, did anybody have any questions about what I just discussed? Okay. The basic financial statements in accounting, especially for small business owners, I've listed 3, but the 2 main financial statements are the balance sheet and the income statement. So the balance sheet shows the financial position at a specific point in time, which goes back to the assets equals liabilities plus equity. So can someone come off of mute and tell me on a balance sheet what would be an asset on a balance sheet?
Equipment or land?
Yes, equipment or land would be an asset. Another asset would be cash. So assets are things that you own. And like I said, liabilities are what you owe. So a balance sheet will give you all of those things, your cash, your land. It will talk about your accounts payable and accounts receivable, anything that's owed to you. Anyone owing you money would show on your balance sheet. Anyone you owe money would show on your balance sheet. As an accounts payable, anybody owing you something would be an accounts receivable, because that's money that you'll be receiving in. Accounts payable is money that will be going out. So that's what the balance sheet shows. The income statement is your profit and loss statement. And this is the statement, oftentimes it's easier to understand. And it's also what a lot of business owners use on a monthly basis, just to know, what was spent and the money that was made. So on the income statement, you have the revenues, which is any money that you receive. For a small business, that can be any money that, like for Deja, it would be the sale of her bonnets. How much she got from selling her bonnets. So it would be any revenue you received. A lot of times in not-for-profits, it's any grant monies that are received and things like that. On the expense side, that's anything rent paid, supplies, like I said, utilities expense. So all of those things are captured on the income statement. And then your revenues less your expenses is your profit. So that's the money that you have made. And these statements are usually run on a monthly basis. to keep your business in order and let you know, where you stand and what you have and what changes you may need to adjust and make to keep the business successful. Next, we have the cash flow statement. And this statement just tracks the flow of cash in and out of the business. And most times it's separated by operating cash, investing activities, and financing activities. A lot of small businesses don't run this statement. They just go with the balance sheet and the income statement because it still gives you a true picture and a story of what you have. And again, to prepare each of these statements on the balance sheet, you would list your assets, your liabilities, and your equity. On the income statement, you would gather all of your revenues and your expenses, and then calculate your net income. What I will say in this area, a lot of the small, well, not a lot, but a few of the businesses or business owners that have, that I have worked with, oftentimes the income statement becomes muddy because they may have a credit card or a debit card and they intermingle their funds. So I've had it where a business owner may take their, pay their mortgage out of their regular bank account, out of their business bank account, I'm sorry. So when I'm going in to reconcile their bank accounts and produce their profit and loss statement, I'm having to pull out all of these things because it doesn't affect the business, though it's in the account, and it muddies the waters, if that makes sense. So a rule of thumb is there needs to be a separation. If you have a small business, you need to have a credit card for your business, credit cards for your home, checking account for your business, checking account for personal. Because once you start intermingling, it becomes very muddy and it's very hard to get accurate financial statements.
Shelita, can I say something like that?
Yes.
Okay, last week I actually talked about the taxes, and everything. When she talked about commingling the funds, that is a big no-no because you can actually do what's called breaking the corporate veil, which means prison time. So hopefully, everybody is keeping what's called clean books and not commingling stuff.
And honestly, it's very easy to do. I've had them where they just, they were going to the gas station. And they said, well, oh, I didn't have my card, so I just put it on my business card. But you have to get in the mindset and the habit of not doing that. It makes it harder for your accountant. It makes it harder to produce accurate statements. And like Ann just said, it can result in even larger consequences. Somebody have a question or comment on that?
Ma'am, I do. I don't mingle, cohing, whatever you were saying, the two of them. But I was told by a tax professional, and you can correct me if I'm wrong, like my business. So I use that for my debit card, for my business card, right? And like you said, for your mortgage. And I do pay my mortgage with my business money because that's where my office is operating at. So is that not right? Should I not pay all of it or pay a portion of it? Or should I just completely stop it?
And
Okay, so you're saying you pay the mortgage out of your business account?
but her business is in her home.
Okay, so if the person was doing your taxes correctly, they would do what's called a business use of the home, and that's a different form. Your business use of the home is you have to have a dedicated area that is strictly for your business. Some people do daycare. They may use their whole house for daycare and it accounts for it on the business use of the home form. But if you only have like an office and you have to know the total square footage of your house and the square footage of the room that you use strictly for business, And that will give you your percentage for your business use of the home. So if you're paying your whole mortgage shouldn't be paid if the whole house is not used as a business.
Does that answer your question? Okay. Any more questions regarding that? Okay. So next we will go to cash flow management. And it's just, the objective here is just to understand how to effectively manage your business cash flow. And cash flow is pretty much just the movement of money in and out of the business. The difference between the profit and the cash flow, because a business can be profitable, but still run out of cash, because having profit and running cash, like I said, cash is just the monies that's running in and out of the business. The importance of cash flow management is to make sure you have enough to meet your operational needs. And for a positive cash flow, just a few tips to ensure you are maintaining a positive cash flow is that you have to set payment terms for your clients. And that is something that a lot of businesses can run into a problem with, because if you don't set the parameters up front, then you can't expect payment in a certain way. And when I say that, you know how a lot of people have payment days, your payment terms are 30 days, which means once I send you my bill, you have 30 days from the date on that bill to get me paid. But you have to set up payment terms, or you can't really argue of when someone is paying you. Some invoices are paid due upon receipt. So it says when you get the invoice on the 1st, you don't have to the 30th to pay it. You need to pay the invoice when you receive the invoice. But as a business, it's up to you to set payment terms. A lot of businesses you pay at the time of purchase. It just depends on what your business is. And I'll go back to Deja because I know she's on here. She has a binding business. You're gonna, before you receive your product, you're gonna pay for your product, whether you're paying in person or if you're ordering online. When you order it, you pay now. You don't get it and then you get invoiced. So payment terms, and that makes a difference in your cash flow, because some people can't afford to put terms out for 30 days because you don't have enough cash flow to wait 30 days to get your money, because there's still bills that need to be paid, as the business goes on. So that's how you can set your payment terms. And sometimes a lot of businesses have 30 days, but you get a discount if you pay in 15. So there's lots of different ways that you can set up your cash payments, and it may be a 2% discount, which it makes people want to pay sooner because people want to take your 2% discount. So that means you're getting your money quicker and they're getting, 2% off. So you have to be thoughtful in the way that you set up your payment terms for your clients. Also, keeping track of accounts receivable and payables, that's a part of cash flow. Because if you do, have due on 30 days, then you have to be able to keep up with who owes you what, how much cash you have outstanding, what cash you have in, what cash is past due. And then you can also a lot of times set up on the front end, you usually set up an allowance for doubtfuls, which means monies that you won't receive. And you hope that that's a very small percentage, but that's also, you set up, it's almost like a cushion that you set up because if you have 30-day payment terms, oftentimes somebody is not going to pay you. But you have to keep track of your accounts payable and receivables to know who hasn't paid you, to follow up and things like that.
Okay, I got a quick question.
Okay.
So on the hair side of my
Mhm.
business, since I do hair, the people pay a $20 deposit
Mhm.
whenever they book, and then they pay the remaining amount like at the time of the service or whatever,
Mhm.
right? How would I calculate dang, what's that word you just said? Whenever you don't know if they're gonna pay it or not?
Like your allowance for doubtful accounts.
Yeah.
So, or it's like a bad debt or things like that. You can calculate it by having a history of how, like, say, out of your 100% of your clients, 10% of your clients normally don't pay you,
Mhm.
or normally, so
Or
you,
like if they don't, like they'll pay the deposit and then like they'll cancel their appointment or they'll do like a no show or something. But like I don't know, I don't know how to measure that.
yeah. And so if they pay their deposit, and then they cancel their appointment when they pay, so on that, I would, on your end, you're really not booking the revenue until their appointment time.
Mm-hmm.
So it won't be like a write-off because you shouldn't have booked say their hair was $100. They paid you $20. You
Mm-hmm.
shouldn't book that $80 until they come to get their hair done.
Okay.
So because it's not booked, you don't have to have an allowance for doubtful account because you haven't booked that revenue yet because you haven't received it. Does that make
Okay.
sense?
I
But
think I get it.
yeah, but if they come in, get their hair done and don't pay, that's when that's an account that's not paid in
Oh,
full.
that's what that. Okay.
Yes,
Okay.
yes. And then just to maintain a cash reserve for your emergencies. But that's the importance of having a cash flow. So you can you know what you have outstanding, and you can set up a reserve for anything that goes wrong, or when you just need something extra, you need to have a reserve for that. Tools that you can use for cash flow management is just forecasting to predict and plan for cash needs. So if you have a business that every month you're normally making between $2,000 and $2,500 a month, you can forecast each month. Or if you have, say you making in the summer months, I'm going to make 5,000, then it's going to slow down in the fall and I only make 2,000. Once you have historical data, you can forecast on an annual basis, on a monthly basis, how much money you're going to make, because the ebbs and flows of your business. When business is more frequent, or you're going to have less clients at a certain time of year. But that's how you predict your cash flow, and then you can predict your cash needs. Because if it takes $2,000 to run your business, and in January, February, and March, you're making $4,000, but then in April and May, you're only making $1,500, then your cash flow statement, when you're keeping that monthly, it helps you to predict how to move, what's needed and what needs to be cut back by the month, if that makes sense. Also, with your cash flow management, you can monitor your accounts payable, what you owe, your accounts receivable, what you're expecting to get in, so you can avoid any surprises. So all of these things help you to forecast out what your business is going to look like in a year, 3 years, 5 years, or even on a month-to-month basis. Because a lot of times smaller businesses, you're not going out 3 years. You're really looking from this month to next month, what's going to happen and what am I going to need and what do I need to adjust? Any questions? Comments? Okay. So next we're going to talk about accounting software. And why would you want an accounting software? I would say, because a lot of people that have small businesses, depending on the business, a lot of times people just will use an Excel spreadsheet to keep up with their business. But then a lot of business owners don't know Excel or don't know the ins and outs of trying to keep these things. And I know we hear a lot that people, you can't afford it. And what I've learned a lot of times when people come to us and they think they want to have accounting software, they want to have an accountant, and then we talk to them and give them a monthly fee that it will cost, and then we don't hear from them anymore because they don't think they can afford it. But honestly, you can almost not afford to have some kind of accountability, some kind of bookkeeper to help you, an accountant, a software to track your business, to track your ins and outs. Because in the long run, it's usually more beneficial to have it than not have it. So an accounting software, it'll automate your processes. It reduces the errors and it saves time. So where you're trying to keep up with, I had one client that he would bring me a bin this big of receipts. And then I would have to go through every receipt, put it into the software, not accounting for receipts he forgot, he lost, all of those things. And it just it leaves a lot of room for error. And then a lot of times you're missing expenses because you didn't book them, because you don't know where the receipt is, or you may be missing money that you went and did a deposit, or you do a deposit and I'm looking at your bank statement saying, well, can you tell I have the amount, but I have no idea where this is, so I don't know how to book it. And it's like, oh, I don't remember. That was 2 months ago. I don't remember what that was or what. And it just muddies the waters in your books, and you just do not have accurate financial record keeping. The software also generates reports. Oftentimes you might want to say, oh, let me see how much money I collected between January 1st and January 15th. Let's see if it was what I was expecting it to be. Well, if you're putting in the correct information, or if your software, is loaded and has what you need, you can just push a button and that report will come out that easy. And one thing, what we say in accounting, when you're working with a software, if you put in garbage, you're gonna get out garbage. But if you're putting in the right accurate things, the reports it's at a click of a button, and it's so helpful. The software can also manage your payroll. If you have, if your business has staff, then it manages your payroll. It manages the taxes, it manages the hourly rate, what they get paid, how many if you set it up right, all you have to do is put in how many hours they work, and it's going to spit everything out for you, the taxes, and all of those things. And the software will also, last week we talked about independent contractors versus employees, because a lot of small businesses, they don't want employees, but they have people that do work for them, and they call them independent contractors. That way you can just write them a check. You don't have to take any taxes out of it. It's up to them to turn it in to the IRS when they do their taxes. And what you do at the end of the year is do 1099s to give them, to say, this is how much money I paid you this year.
I got a question.
Okay.
When you said independent, because I wasn't there for the last weekend session.
Uh-huh.
So whenever I vend, the people that help me vend, the way I pay them, I just pay them the $100 because it's typically just for like maybe 3 to 4 hours.
Mm-hmm.
So am I incorrect labeling? They're not my employees. They're just an independent contractor, because
Correct.
you don't use the same person every time.
Correct.
And then, okay. Because
They're not your
use
employee.
QuickBooks.
Yep,
And
that's good.
That's my way of, like if I go to the gas station and I'm delivering pickles, that's mileage.
Right. And that's correct.
Yeah, girl. All right, Shelita, come on.
But the thing is, so say, because I know you do a lot of vending. So
Yes,
say
Lord.
you use Ann for seven of your vending, 7 of your events, and you pay her $100 each time.
Yeah.
Well, once you paid her over $600, you need to give her a 1099 at the end of the year.
It's
Because
not that then. I'm good then. I'm good because I know.
as long as you're not paying over $600, and that's this year. Next
each
year,
person $600.
each person, correct.
Do
That's
my
why I
kids
said
count?
if you're paying them, they do. And
Well,
what
get
happens
your ass
is,
up and do that. That's me.
what happens at the end of the year, you get to write off that expense of paying them once you've paid them over 600. So it helps your business, but they are responsible for filing taxes for that, which is why you would give them a 1099.
Gotcha. Okay, I'm good then. Okay.
Mhm.
I have a question
Okay.
about the 1099. So you're saying if you pay your independent contractors over $600, then we need to give them a 1099. Is that required?
Yes.
Okay. And when you give them a 1099, you basically you need their social security number.
Yes.
Okay.
And when you come into a contract with the independent contractor, that you're not going to that you're, if you know you're going to pay them more than that. So, say I want you to help me in January. I'm gonna use you through the end of the year. I'm probably going to end up paying you about $2,500. There's a form called a W-9 that you should get ahead of time.
I gotcha. Okay.
And that way, when it comes at the end of the year, you're not chasing anybody, because then they might be like, oh, I'm not giving you that because I don't want to file this on my taxes. So now you don't have their information to give them a 1099, and you need that information. And that's how it's tied to the IRS, because even if they don't file it, you will file it at the end of the year when you file your report for your 1099s. So the IRS will already have their information. So then it's up to them to file it.
I see. And then as far as filing the 1099s, how do we go about doing that on our end as a business owner?
Yes, at the end of the year, there's a report. And what is it called?
Well, if you use QuickBooks, you can do the 1099 out of the QuickBooks. But then there's other software companies where you can just do your 1099s and your W-2s through their forms and everything, but there's a cost tied to it.
But I mean, it's the 1096, because she's saying, how does that happen? So you'll file a 1096 once you finish all of your 1099s, there's a report that you have to file to the IRS, and it'll say how many 1099s did you give out? How much was how much was it? And then you'll send them that. And then that's how you file it on your end.
Okay, so for the business owners, it's the 1096. That's what we file for all of our 1099s.
Yes.
Okay. And one more question. Is there, so I don't use QuickBooks right now. Is there another option, inexpensive option for getting 1099s?
Yeah, I'm going to give at where it says choosing the right, popular software options. So we'll talk about that. But Ann is the tax guru. Once we get there, she might know other options to do 1099s.
Okay. All right. Thank you.
You're welcome. So those are the reasons for using accounting software. And my last reason I said payroll. It tracks inventory for people.
Hold on, Shelita. Hold on. Let's go back to the 1099.
Okay.
Please look out for legislation that's coming down, because the 600 mark was being updated, and they changed that. They changed that. So please be on the lookout for that.
So for next year, it's $2,000. It's $2,000 starting 2026, which is good.
So they increased it?
Yes, they have.
Okay.
But that's not effective to 26, right?
Right, to 2026. Correct.
How can we be on the lookout for that if we're not in the finance industry? So we keep a pulse on that kind of stuff.
I would say they are, and I don't have them on me. We can get back with them, but they are alerts that you can sign up for. Maybe from the IRS.
Okay, from the IRS alert.
Yes.
Okay.
Or is that right, Ann? Or I don't have.
I just read just news articles and stuff I get on my phone. And I do get a lot of accounting type stuff, but a lot of you just
have to be on the lookout when they talk about changes for taxes and stuff like that.
Right. I understand that, but on the lookout where? Because I'm not in the accounting industry.
Right.
So where would we be looking out for those alerts?
That's a good question.
And
Well, like I
that
said,
news,
they
like
might do.
those alerts that you receive, are they from the IRS or are they from other organizations that actually keep a pulse on the accounting or IRS regulations?
Well, when it's something big like that, I've seen them talk about it on the actual news
Yeah.
broadcast. Um, the other one might be Yahoo Money or something like that. Some of those type of articles that's out there. You can Google and search, independent
Okay.
contractors or 1099, just to keep up on it.
Okay. Yeah.
And I
So
would say it might be good to just do it once a year, like when you're about to do 1099s for this year.
Mhm.
Because it's for someone, like you said, that's not in the account business, you're not just gonna be prone to just say, oh, let me go out and see. But when you're doing your
Exactly.
WTs or 1099s at the end of the year, that's probably a good time to say, let me just Google this to see if there are any updates before I do this, that's what I would suggest, because in the midst of having a business and running a business and doing it, you're not just gonna think about, oh, let me go see what the IRS is up to, unless you're in the accounting or the tax world.
Exactly. Okay.
Yeah, but when you are in the process of doing, those things, and I would also say the accounting software that, they usually prepare tax documents as well. So it may be when you are at that point in your software, there may be a pop-up, on your software to say, oh, just so you know, or FYI, or news and updates, the 1099 amount has changed, or this is the last year for $600. Now next year it will be $2,000. So that would be
And
my
will you guys, thank you. And will you guys also be providing us with some preferred or recommendations on accounting softwares outside of QuickBooks?
Yep, that's what I'm about to. That's on my well, if you
Okay.
see, yeah.
All right. Thank you.
You're welcome. Thank you for all the great questions. Features to look for when you're looking for an accounting software, I would say, is the ease of use. Depending on what kind of business you have, you want to make sure it's user-friendly. For non-accounting professionals, as you were just speaking, like I'm not in accounting. So you want something that's pretty easy to use and user-friendly for your business. You want a software that has an integration, meaning it can integrate with your bank accounts, because we use QuickBooks a lot. That's the one that we use the most, but there are more out there that I will talk about. But when we are and when I say we, Ann and I, we do accounting and bookkeeping and payroll and taxes outside of, on the side. So I'm saying on the side, but that's what Ann does. But a lot of our accountants our clients that have QuickBooks, we can pull their bank accounts into our QuickBooks software. So all of the checks that they've written, all of the deposits that they made, just automatically comes into the software. And once we set the software up to a certain extent, all of the fixed expenses, they come in and they automatically populates them to what we want. When I talked about general ledger accounts, it automatically populates those accounts. And when I say fixed accounts, does anybody know like what a fixed expense would be in accounting? Can anybody take a shot at that?
Rent.
Yes.
Things that don't change.
Exactly. So fixed expense. So then once we set it up, because it pulls every month, and say we're renting from Strano. So once we set it up, every month when it comes into QuickBooks, it knows that Strano $500 is rent expense. So it'll automatically go there in our software from your bank account. So you want to look for software that does integrate with with accounts, and also look for, even when you're setting up your bank for your business, some banks are easier to work with on those kinds of things than others. And that is important. because I've had a client that says, I haven't pulled anything in a year. Well, some banks I can just go to and just download all of those statements or download the information that will pull right into QuickBooks. And then you have other banks that may say, oh, well, after 3 months, we can't get it. So that makes it very hard for an accountant to get your books together. A scalability is just saying, can the software grow your business? Can the software do things to help you? You know, does it have all the reporting that you need? All of the financial statements that you need and the cash flow statements to customize. Can you customize it to get what you want? So those are some of the features to look for when you are looking for software. And as you see listed, some of the popular software options are QuickBooks, which is ideal for small businesses. It's easy to use and it has good reporting. You can get good reporting out of it. The rest of them, I did a little research just to get some other software, but I'm not as familiar with them. I don't know if Ann is familiar with any of these. One is called Xero, and they said it's great for collaborative teams, cloud-based, and it's scalable. FreshBooks is for service-based businesses and freelancers. Now it says Wave is free and it's a simple option for small businesses. So if you all have small businesses, this may be beneficial for you, but I don't have any background on it. And Zoho Books, which is for growing businesses. And do you know about any of these besides QuickBooks? She's on the delay. She might not be able to answer. But
What did you say that?
I keep hitting the wrong button. My fault. I've only heard of Waves, and I know someone that uses that. And she says the lady that she uses it for only have about 20 to 25 transactions per year.
Oh, per year. Okay. Are you all still seeing my screen?
Yeah.
Okay.
Yes.
Okay.
Yes.
Oh, there it is. Okay.
Okay. So those are some that you can look into. But again, we know that QuickBooks, you know, does what it needs to do.
And Shelita, I can attest to QuickBooks because I'm not that computer savvy, but I have the app on my phone, which was suggested to me because, like, when I'm out and about, and again, if I'm getting gas or if I'm meeting with the girl that does like all of my tablecloths and things like that, that's a business meeting, and you can write that out. So I'll log it on there
while you're there.
While I'm there.
Smart. Very smart.
But that's what I was taught. Ann taught me that too.
And that's good because it's so easy to leave there, go do 3 more things, and then you forget about it and it never gets lost.
I ain't gonna say I do all that now because some stuff I miss and I go back by the end of the week. I try to look into it on the weekends.
That's good.
But
and that's what you want. You have to be intentional about it because it's otherwise
I don't look good in an orange jumpsuit at all.
So does QuickBooks scale you based off of how many transactions you have as far as pricing goes?
It does.
Let me think about that. Hold on, because
I don't think it does as a part. It's a flat rate.
It's a flat fee. Okay.
Yes.
Okay. Got it. All right. Thank you.
You're welcome. So those are softwares that I would suggest you look into. And to choose the right one for your business, I would suggest you assess, you know, the size of your business, what you need, and what your budget is to pay for it. So that would make a difference. Again, I would start with Wave because it says free and we like free, and see what it offers and then go from there. And QuickBooks, I know there are different tiers. There are different tiers of pricing depending on what you need. They have a cloud-based, like Trini said, something that you can have on your phone. That's something else to look for, you know, mobile options, because that's very convenient, especially for on-the-go businesses. And once you get into the habit of, oh, I was here, it takes me 2 seconds to just go on here, maybe 2 minutes on my phone and click this and just mark what I did, you know, or log it. That's very helpful. And then consider trying free trials to test software. A lot of them will have a, 7-day free trial or a test app that you can just get in just to see if it seems like it will work for you. So I would suggest that. That is pretty much the end of my session. The key takeaways that I would say is just to know the importance and the importance of accurate bookkeeping, because it is so important. And it might seem tedious in the beginning. Once you get in the habit of it, it's just a part of your day. It's a part of your business, as it should be. And it is so worth it in the end. Preparing essential financial statements. But when I say preparing them, once you get a software and put your information in, you don't have to prepare them. All you have to do is push a button and it will shoot out whatever it is that you need. And the thing about it is, if you're putting in good information, you can go by dates, by 1 day, by a month, year, quarters, however you want to pull information, you can pull that information and help to plan and forecast to make your business successful. Hopefully you got something out of it about the role of cash flow management in business and how important it is to have cash flow, to watch your cash flow so you can forecast things and again, be successful, and how to select the right accounting software when you get to that. And outside of the right accounting software, if you are diligent at doing it, or even 90%, you can do it yourself. Otherwise, if your business grows to a point where you feel like you can afford a bookkeeper, and oftentimes we have quoted $250 a month, $300, because we know that the businesses are small. We're not trying to break anyone, but we have to pay for our time, but we want people to be successful and to set themselves up for success as well. So when you think you don't want to put that $250 a month in your budget, $300 to have someone to look over your books on a monthly basis, it is definitely worth it in the end. So any questions that I can answer, or any feedback you have, or any concerns or anything?
This is Don. I didn't know if you wanted to touch on the different types of accounting, their accrual versus the cash basis.
So I think I didn't say what it was, but there are two different types of accounting. In the cash basis accounting, you book things when you get them. So you book when you get the cash, you realize the cash and the expenses at the time that you receive it. On the accrual basis accounting, if you know that you're getting funds in, you will book the revenue even when you know it, even when you don't have the funds in. You will book it at the time of receipt of not the monies, but the notice that you'll get it in. You'll book things then. Most small. I'm sorry.
Anything about book it, or you referring to log it?
Yes, I'm sorry. Yes. You'll log it, right, when you receive it versus when, when you know that it's coming versus when you receive it, if that makes sense.
So let me make sure I understand. So the accrual, you're saying we log it once we invoice them for the service?
Yes, because once it's earned, right.
Right. Okay. But do we log it the day that we invoice them, or the day that they're due? Like if it's a net of 30, do we log it that 30 day, or the day we actually send the invoice out?
You log it when you send it out.
Okay.
So say you go and like you do a service, but you give them 30 days to pay for it. You log it when the service happens.
Got it. Okay.
You log your revenue when it's earned, because you've earned the funds. You just haven't gotten them. And you, when an expense, you log it when the expense happens. regardless of when you get the money for it. Go ahead.
Is there any way that you guys have a system set up where it can be out to us, or is it something that we just taking in the information that's telling us for us to go out and research it ourselves? I get it. I understand accounting and finances, but I don't know it in depth like you know it to really completely understand what you're saying without doing it more than one time. So is there's something set up to work? I know that you guys are not helping us for free for accounting, but of course we have to pay for it, or is there a way that it could be provided?
And you were kind of going in and out. You said, is there a way to where you could get more accounting, like more lessons on accounting?
Yes, ma'am, because I understand it, but I don't completely, I understand what accounting and what you just explained in finances, but I don't completely understand it to where I can just go off on my own and research what you just taught me. So if there's somewhere else that somebody else that can talk to me about it more of and in depth. Or maybe somebody I can tell what my needs are and what my expectation or what my goals is, and they can give me the feedback and to lead me in the right direction.
I'm going to defer to the rep from Justine Peterson to see if there are any more classes regarding like basic accounting 101.
We have other webinars coming up that will speak to that as well. Who was that asked about it? April. Okay, April, I'll send you an email, okay?
Okay, thank you.
You're welcome. If there aren't any other questions, we can end it right here. I just wanted to remind everyone that the webinar series impacts, so you want to make sure that you're here to view each webinar, because some of your questions may be answered on a webinar that's coming up. I do thank you for your time. And Shelita, thank you. This was very informative. We appreciate you. Do you have information for someone if they wanted to reach out, talk to you further?
Yes, I can put my email in the chat if I can find the chat. And I'd just like to say thanks everyone for attending, and you all had really good questions.
Yes.
Shelita, thank you.
You're
Very
welcome.
informative, the information you provided. And I just want to say kudos to you and all of the other facilitators on here. Thank you all for not gatekeeping. Thank you all for sharing the knowledge.
Absolutely. Our pleasure.
All right.
Have a good day.
Y'all too.
Bye-bye.
Goodbye, everyone.